Today is Monday, November 23rd, and this is a post-market review for the stock market activities today. Right away, we were expecting the reaction from traders when we opened Thanksgiving week. The expectation was for profit-taking closing positions before the long holiday. And we did see that in the morning as soon as we gapped higher because, you guessed it, today was Vaccine Monday once again. So the market did gap higher and we did see profit-taking pushing the indices all the way to the red territory. And then of course, by the end of the day, came the confirmation of the news that Joe Biden will pick former Fed chairwoman Janet Yellen to become the next Treasury Secretary. We already knew that, but this is not your father's market. We don't see buy the rumor, sell the news anymore. We do see buy the rumor, buy the news, and then buy the outcome, regardless of whether it is actually the news that the market expected or not. That does not matter. We are in buy territory. And to illustrate that for you, I have some important charts and headlines in the headlines of the day segment. I do have very interesting trades for you during the options market analysis, and I also do have plenty of charts to cover today. The usual SPY, Qs, VIX, dollar index, gold, TLT, TNX, Apple, Tesla. We do have very important developments in some of these charts. But I do have more for you. Hershey's, Xpeng, Fuel Cell, Stone Cold, and Target. So stay tuned for the bonanza of charts. And here we go. The Dow Industrial Average closing in the green by 327.79 points, or a gain of 1.12%. The Nasdaq also in the green, but it was the notable laggard of the day by 25.66 points to the upside, or a gain of 0.22%. The S&P 500 closing in the green, 20.05 points, or a gain of 0.56%. What sectors led the day? Remember, it was a vaccine day / rotation trade day. So it is no surprise, energy once again at number one, capturing the gold medal by far, followed by financials for the silver and consumer cyclicals for the bronze. The laggards of the day were healthcare, communication services, and consumer defensives. And what's going on here with the futures market? Right away, you see it was an upside day for crude oil, up about 1% or so, but the strength is in the Brent crude oil, not the Texas WTI. And what's going on with softs? Another day, another rally, another squeeze for coca. And by the way, here is the Hershey's trade that I entered last week, and I recommend it for you to follow this trade due to the squeeze in coca prices, shorting Hershey's. And the entry point here was at 155, the exit point at 145.5. We're not there yet. There's still more room to go. However, I took half of my position off the table today, locking in my profits and letting the rest ride if we continue to decline in Hershey's. But if we do see a reversal, I've already made my VIG. And this is, of course, the beauty of profit-taking in options trading. But back to softs here, we did see soft action for cotton and OJ, another day of declines for coffee and lumber, sugar also experiencing the same weakness to a lesser magnitude. What's going on with metals? Lots of pain. Big down day for gold, big down day for silver, platinum, even copper. But we did see palladium gaining over 1.3%. And remember the piece of news we covered last week of the surge of auto manufacturing output here in the US. More production, they're going to need more catalytic converters, aka palladium prices go higher. In the long term, palladium is a dying commodity because we will shift to electric vehicles, unless of course they find another use for the metal. But for now, we're looking for a trade, an entry point to ride the next wave of gains in palladium. But the gains today were in meats. We see live cattle, feeder cattle, lean hogs all gaining significantly today. Grains, muted day across the board, and the session already started, the new session. That is, when I took this screenshot, but we did see during the trading hours that oats declined significantly over 3%. And now, moving on to the big casino, the options market, and we did see significant uptick in activities today. Right away, the most active stocks here in terms of options volume traded today. At number 1, Apple, with 1.8 million contracts traded today, about 74% of those were calls. Apple declining significantly today, but options traders seeing it as an opportunity to stampede and buy Apple call options expiration date this week. And we did see NIO at number 2 with 1.2 million contracts traded today. About 70% of those were calls. Tesla at number 3, the squeeze continues with over 1 million contracts traded today. About 65% of those were calls. And let's move on to some interesting trades that took place today. But I will start by answering the viewer's question here. The first part of the question says, can you please cover other crazy stocks such as NIO? And the second part is, when I discover these trades in the options market, the interesting trades, do I follow them or not? So let's answer the question here. Number 1, when it comes to crazy names like NIO, Xpeng, and Tesla right now, there is another name that you're going to see repeatedly on the tables. It is FCEL, Fuel Cell. These names are experiencing a gamma squeeze when traders start to stampede by buying call options, therefore resulting in option sellers having to buy the underlying stock as a hedge. A gamma squeeze leads to exaggerated and very significant gains in the stocks experiencing the squeeze. The sustainability of the gains is another story. But here is the ABC of shorting. Number 1, you never short a stock that is experiencing a gamma squeeze. Never. So you're not going to short NIO, you're not going to short Xpeng, you're not going to short Tesla, Fuel Cell until and unless you get a confirmation of a reversal signal. Number 2, the ABC of shorting. You never short a stock that is experiencing a short covering rally, aka Wayfair and Carvana. And let me illustrate to you what I mean by that by visiting the daily chart of Xpeng. Here is the chart. It is on a tear, as you can see from the candle's movement. And here is what I see, a series of bull flags breaking out to the upside. Looking at this chart, do you see any solid reversal signal? No, you don't. So why are you interested in shorting the name without a confirmation of a reversal coming? You're looking at all of these gains and you're thinking that this is ridiculous and it should reverse at any point right now. You might be right, but the likelihood is you're going to be wrong, and your risk versus reward. Shorting a name like Xpeng right now is on the side of risk until and unless you see the sign and the signal for the reversal. By shorting Xpeng right now, you're basically falling into the gambler's fallacy. What does that mean? The gambler is walking around the casino, looks at a roulette table and sees the scoreboard. It has been 8 times in a row now where the roulette is hitting red. The gambler looks at the action and assumes that the next ball is going to fall on black this time around because it has been ridiculous that 8 times in a row we see red. The gambler bets on black, and what do you know? The roulette lands on red once again. Why? Because the probability for each single round in the roulette wheel is independent of the previous run. It could land red 10, 20, 50 times in a row. It would not be out of the imaginary. And the same thing here with any stock experiencing a gamma squeeze. Just because you're seeing red big time 3, 4, 5 days in a row, that doesn't mean that on day number 6 the stock would reverse. It could go all the way to day 13 before you see the reversal. Here is another chart that you see in front of you for a name that you're going to see repeatedly on the tables: Fuel Cell Energy. The Robinhood crowd are stampeding to buy call options for this particular name. Whether there is a legitimate catalyst or not, it does not matter. By stampeding all of a sudden to buy fuel cell calls, it is forcing the sellers to buy the stock as a hedge. And when you see this massive surge in volume, you know that the stock would rally higher impulsively. Now, looking at the chart, do you see any reversal signal whatsoever? No, you don't. It is ridiculous. It is a vertical line. I get it, but it could go for another day, even though the stock was up over 50% today. But if you do short, then what do you know? Tomorrow the name rallies another 50% before falling the day after. You are still going to be in the red, experiencing pain, because the name did not behave exactly in the timeline that you decided to create for yourself and try to be ahead of the game, making a very classic mistake here. So the take: do not short any name that is experiencing a gamma squeeze. Do not short any name that is experiencing a short covering squeeze until and unless you see a signal and a sign for the reversal. What is that signal, by the way? Let's revisit the chart of XPing. You see the big daily candle that took place today? The low for the candle is about 54. What you need to see for a reversal is a daily close below the low of the breakup candle in or around the level of 54. Other than that, you do not have a reversal. You have a dip that you will see the crowd, the former crowd, stampeding to buy it and push it higher. And before we move on, does this also mean that you should follow the herd and buy calls on these names that are experiencing gamma squeeze and short covering squeeze? You could, but it is not an investment thesis. It is a gambling thesis. You could take the wild shot, but what happens if it is your luck that on the day you decide to take the shot to short the name, it decides to reverse lower instead? For me, I ignore these trades and I leave it for the wild crowd. There are better opportunities to make profits in this market besides following the hot trade, whether betting for it or against it. And let's go to the options market here and see what's going on with some of these hot names and the trades for them. Right away, you see here is a bearish bid for XPV buying the 60 puts. Expiration date this upcoming Friday. And the trader is committing significant amount of capital for this one trade, over $4 million. Now, looking at the chart of XPV, you don't see any reversal signal yet. Looking at the options market activities, somebody's committing significant amount of money betting on a reversal. Do they know any insider information that will cause the reversal, or are they big shot gamblers trying to get ahead of an upcoming move? You wouldn't know that. So what happens is you look at this trade, it is notable, you keep it in mind. If you do see a reversal in XPing tomorrow closing below 54, then you know that this is your confirmation that we are seeing a reversal, a legitimate one, and a wave of profit taking in the horizon. Here is another one for Fuel Cell, FCEL, buying the $9 calls, expiration date December 18th. And again, massive amount of capital committed here, almost $4 million. Now, is this a bet where somebody thinks the name will climb way higher by December 18th? Or is it somebody calling the top and selling those calls instead? You would not know that, so you keep the trade in mind. However, you wait for the technical sign of the reversal instead. Now let's go back to the question and answer the second part of it. It says, do you follow these trades when you see them? And here is my answer. When I see a highly unusual trade with a lot of capital committed, yes, I do follow them. Example, Stone Cold, STNE. But here is a trick. If you're gonna follow these trades, you better have a very clear interpretation of what do these trades mean. Otherwise, you will get caught in the wrong side of the trade. Meaning, on the last video, we discussed the very bullish trade, unusual trade for Stone Cold. Somebody's opening the 75 calls costing over $1 million. And here is how I follow this trade. On the face of it, it looks like somebody's very bullish here in Stone Cold buying the 75 calls. But when you do the homework, before you follow the trade, you look at the charts. What do we see here for Stone Cold? You see the name trading in a range in very defined trend lines, diverging slightly below, slightly higher, but at the end of the day, it is trading in a range, signaling that this stock is actually getting toppy. So now my suspicion is that some insider here for Stone Cold, which is a Brazilian company based on the Cayman Island, knows that we are reaching a top and they're selling the 75 calls, expecting that they will expire worthless by expiration date because Stone Cold will reverse lower. That is the suspicion. What did we see today? A confirmation. And here is somebody now opening the $60 puts expiration date December 18th. For me, this is a confirmation that Stone Cold will decline very soon. So what do? I follow this trade by buying the puts. The $60 puts, expiration date December 18th. But again, if your interpretation is wrong, you're gonna get hurt. So you better have a very solid argument for your interpretation of the trade before you follow it. Here is another one for fuel cell, buying the $10 calls, expiration date December 18th, with expectation that the name will gain over 18% by that time. And here is a notable spread trade, a bullish one for Apple. And what the trader is doing here is buying the 126 calls, expiration date New Year's Eve. And they're paying about $1 per option for this one, committing a total of over $1 million for this trade. But here is how they constructed it. They sold the 128 calls, also expiring New Year's Eve, collecting 78 cents or so per options, meaning that the trader lowering the risk to about $200,000 instead of over $1 million, because they're cashing about $800,000 from selling the 128 calls, and they're pretty much looking here to double, quadruple, even gain as much as 1,000% for this particular trade, which is very, very smart. The entry price is now lowered to 20 cents per option, meaning that if Apple indeed closes up over 12% at the price of 128 by New Year's Eve, this particular trader will turn $200,000 into $2 million minimum. Very smart structure here. And the last one here for XPEV, they're buying the 65 puts, expiration date by the end of the week. And it could be here, it is the same trader who opened the 60 puts, which we covered earlier. What they're probably doing is the same structure with Apple. They're buying the 65 puts, paying about $4 million for that particular trade, and then they're selling the 60 puts, same expiration date, collecting $2 million or so, thus lowering the risk, the capital risk, to only $2 million, with a potential for a maximum gain of $5 million. Again, these are very large numbers on the tables right here. We're talking in the millions. So I trust the trader here. It sounds and it seems like the trader is a professional, opening a spread, risking $2 million to make $5 million. They wouldn't do that unless they are very certain that XPEV will experience a reversal. But I don't know if that's going to be true or not. This could be another trust fund baby gambling with millions of dollars. I don't know that. So I will not hop on the trade on short XPEV until and unless I see a reversal signal on the charts. Moving on to more interesting trades, we do see puts for Shopify being bought, the 785 puts, expiration date December 18th. These are also very expensive, costing the trader about $1 million for this particular trade alone, and the expectation for over 20% decline by December 18th. So somebody's selling the news here for the whole Black Friday holiday e-commerce spending, which we will talk about more in the headlines of the day segment. Another interesting one for Roku. Expiration date this upcoming week for the 300 calls, with expectation that the name will gain over 8.5% by the end of the week. And here is another interesting trade for Denny's. You like breakfast? I know you do. And this particular trader is betting on the rebound for breakfast, buying the 12.5 calls, expiration date December 18th, and they're committing about $250,000 for this particular trade. Here are some more interesting trades. You do see BBY, Best Buy. Somebody is now buying the Black Friday news and the surge of commerce, buying the 130 calls expiration date by the end of the week. I gave you two scenarios before we started the week. The one where we see a sell-off initially before the holiday on Wednesday, and another one where traders or market participants would decide to buy the news instead, assuming that we will see a very good Black Friday and names like Target and Best Buy, Walmart, Amazon will surge higher. And this trader, of course, is a subscriber of this particular outlook. I see more interesting trades here with Adobe, ADBE. They're buying the 520 calls, expiration date December 18th, with expectation that the name will gain over 13% by then. Another big trade for Costco, COST, buying the 410 calls, expiration date December 18th, with expectation that Costco will gain over 7.5% by then. Again, two different outlooks here. Some traders want to buy all of these names that will benefit from the holiday season: Costco, Amazon, Best Buy, etc. Another slice of the market are not buying it. They're saying that we will see sell the news phenomena, and they're shorting these names instead. Moving on to the headlines that shaped the day, starting with the news we got in the morning that the US will state over 89 China firms to label them as having military ties to the CCP. You might look at this as very negative news of rising tensions between the US and China. But hey, this might be just negotiation tactics, the art of the deal before we actually make the actual deal. Oh wait, the art of the deal is not going to be president anymore. And today's Monday, so what is new? Vaccine Monday. AstraZeneca releasing their results for the vaccine, stating that it is over 70% effective in general, but over 90% effective in certain circumstances. The importance for the AstraZeneca vaccine versus the others is that it is cheaper and it is much easier to distribute because it does not require the very frigid temperatures that the Moderna and the Pfizer vaccines require. So what is going on with all of these vaccine pumps? Here's what happens. Big pharma CEOs and executives dump stocks. And here is Moderna CEO, crooked Stefan Bancel, dumping over 1.74 million shares right after Moderna popped after the vaccine news. If there was any honesty or integrity in the system, they would have required the pharma CEOs will not dump any stocks after the vaccine announcement for at least 60 days. Otherwise, how could you trust the vaccine when the executives inside the company itself are not? They're actually cashing out in what is supposed to be a breakthrough, a breakout innovation in vaccines that should make these companies a lot richer in the future. Oh, and by the way, what is going on with consumer sentiment, at least according to the experts, not the consumers themselves? The National Retail Federation is forecasting a very strong holiday sales amid the pandemic. No, this is not a joke. The National Retail Federation forecasts that sales will grow from anywhere between 3.6 to 5.2 annually. Meanwhile, online sales will be up over 20 to 30%. The National Retail Federation expects lower spending on personal services, travel, and entertainment should translate to higher spending on gifts. I mean, if you're rich, sure, you got more money to spend. If you're poor, middle middle class, you weren't gonna spend on travel and leisure to begin with, were you? And here is Saks Fifth Avenue CEO, who got interviewed after the bell by CNBC, saying that he is cautiously optimistic about the holiday season. By the way, quote unquote, cautiously optimistic is another bullshit term for speaking from both sides of the mouth. Basically, it is the insurance policy for saying, oh, and if I'm wrong, I told you I am cautiously optimistic. Speak like a man. Either you are bullish on something or bearish. Stop speaking with both sides of the mouth. But here he is, the CEO of Saks, saying that the consumers can't wait to get out there during the holiday season and quote-unquote splurge. You know what splurge means? Splurge means that you have so much money, it's coming out of your ears, and you don't know what to do with, and you go on a massive spending spree.
Mark Metrick, Saks Fifth Avenue president and CEO. Mark, what are you expecting this holiday season? Help us understand what's going on.
Well, Leslie, I have to tell you that Matt Shea and the guys at the NRF are geniuses. No, we are cautiously optimistic about the holiday. We're feeling, and if you read and think about how they're approaching it, it's about the shift from experiential into products and goods. And I feel good. I think the consumer's ready. They want to splurge. They want to indulge. They want some escapism. It's the holidays. So it's cautious optimism, but it's certainly optimism.
Now, I'm not sure if the Saks Fifth Avenue CEO or the National Retail Federation saw these very large lines in Dallas, Texas. I mean, look at all these cars. They're waiting and waiting to buy the new iPhone and the new Peloton. Oh, wait, they're waiting in food lines, in bread lines, waiting to be fed because they don't have money to buy food. But hey, according to the Saks CEO, it sounds like they can't wait to spend $3,000 on that new Hermes scarf. But maybe he's referring only to the rich, and in this case he would be right. The rich will go on a spending spree, and they will perhaps explode all these numbers, the statistics, and you will hear the media having a massive orgasm touting the numbers from Black Friday and the holiday season as quote-unquote the consumer's recovery. The problem with this lump sum data is, what if Jeff Bezos decided to go on a spending spree and splurge this holiday season? He could alone exaggerate and distort the number higher. Meanwhile, the rest of us, the poor, the middle class, they're not splurging anywhere. Again, it is the haves versus the have-nots economy, and the numbers mean nothing until you put them in perspective. Oh, and by the way, all of these losers who are waiting in bread lines because they cannot afford their new Saks Fifth Avenue or Hermes scarf, here is some more bad news for you. Economists are now predicting that consumer prices will start rising at a substantially faster pace in the near term. Morgan Stanley sees inflation running at or above the Fed's 2% target for all of 2022. Meaning that you lazy poor bum in the poor middle class who cannot afford to go and splurge this holiday season, you're about to experience more pain because the prices around you will rise significantly, and that food that you're waiting on bread lines to collect will get even more expensive. Shifting to more corporate-specific news, starting with Apple, aka the iMob. An Apple security chief got caught here in a very large scheme trying to bribe police officers with iPads in exchange for concealed gun permits. So I guess the iMob failed to scare app developers by threatening to break their kneecaps if they don't pay the cut, aka the rent. And now Apple needs guns to send the message clearly. If you don't pay us the rent, we'll blow your head off. No more kneecap cracking here. That shit doesn't work anymore. Shifting to a check on consumer sentiment. And right away we have a story about the Robin Hoodiots. And Bloomberg says they got lucky and they got it right. Here is how newbie stock jocks beat the market. And here I am looking at my crystal ball predicting what will happen in the future. These Robinhood traders, 90% of them will end up losing their quote-unquote gains. Only 10% will survive. Here is how. 90% of them, who I call the Robin Hoodiots. Who are the Robin Hoodiots, by the way, you may ask? The Robin Hoodiots is not a derogatory term for anybody who uses Robinhood. That is not true. The Robin Hoodiot is a new generation of investors who joined the market during March 2020, aka the bottom. And the Robin Hoodiots trade by Robinhood, Webull, E-Trade. It doesn't matter what platform they use. The Robin Hoodiot is a state of mind. They believe that stocks only go up and there are no red days. And if there are red days, there are an opportunity to buy. They don't believe in buying boring indices such as the SPY, the Qs. No, that is boring. You need some action here. They buy leveraged indices instead. Matter of fact, they don't believe in stock trading. They gamble via options instead because 10% gains, that is for bums. We only believe in 50% gains or more. And the last thing about the Robin Hoodiots is that they don't care about fundamentals or any technical or financial analysis. They believe that stocks go to the moon, and you don't need to educate yourself and learn more about how to be a stock trader and investor in the long term because you figured it out. You're smarter than Warren Buffett. But the truth is that reality will hit sooner or later, and the majority of these traders will lose their gains because this is how gambling works. You never stop until you lose it all. Meanwhile, the 10% who will survive are the smart ones, the ones who recognize that they got lucky and it is time to move out of the table and book those profits. Now, whether they're going to survive in the long term or not, that depends. Only 10% of the 10% will survive in the long term. Because what if the tides shift in the market? Meaning we see a more difficult market that rewards cyclicals, industrials due to the decline of the dollar and does not reward technology anymore, coming hand in hand with a surge in yields. Will these traders even have the slightest clue how to trade and invest in a market that they haven't seen all the way going back to 2009. Ever since, growth and technology been the story, and this is why only 10% of the 10% will survive. But speaking of market sentiment, let's see what's going on. It is the highest bullish sentiment from retail traders ever. Matter of fact, the flows of cash into global equities the last 2 weeks is getting closer to $80 billion, the highest on record. Furthermore, remember that cool thing back in 09, 08 that we called shorting? Yeah, that is not cool anymore. The kids today don't believe in shorting or that the fact that stocks will fall in the future. And you see that short interest fell to a new low in 2020, specifically since the summer. And what do we see here? In November, who needs gold anymore? Who needs protection? Who needs precious metals? You don't need that anymore. The largest outflow out of gold ever happened this year in October and November, signaling that the market's becoming very, very arrogant, very bullish, extremely bullish, not paying attention to any risk whatsoever. And maybe they shouldn't worry because the Biden administration decided to announce their Treasury Secretary pick, and it is, surprise, surprise, Janet Yellen. And you saw the market popping higher on that news because that will mean more printing activities and more cocaine to the market to a level that you have never seen before. So perhaps the extreme bullish sentiment has some legs to stand on. And moving on to the heat map analysis. And right away, what do we see here? The notable decliner of the day, it is very clear, the big, massive box of Apple. How do I read the activities in Apple here? Because we did not see Microsoft, Google, Facebook, Amazon declining lower whatsoever. Just slightly less than 0.5% or so, but Apple was the notable decliner here with almost 3%. I see it as outflow from the momentum names, specifically Apple, the most crowded name, and allocating that money for lagging sectors instead, such as energy, real estate, consumer cyclicals, the rebound, reopening names. Now, who would do that? Is it retail traders who would think like this? No. There is no retail trader saying, yeah, I should sell my Apple and buy some ExxonMobil. This is institutional moves, which further illustrate that Apple will become even weaker in the near future. But what do we see going on here with the technology sector in general? We see Taiwan gaining higher again, about 3% or so for the day. Intel about 1.5% for the day, but the hotter names such as Nvidia, AMD, Qualcomm lagging the day. Another big day for Uber, Square, Cisco, Lam, AMAT, IBM. So we see old school tech with old school chip manufacturers also gaining, closing higher for the day. The momentum names, not so much. Shopify down today, DocuSign down as well. Workday, another day for the declines after earnings. And what's going on here in communication services? A modest down day for Google and Facebook, the big boxes, but we do see more pain here for Netflix, Zoom, Baidu. Meanwhile, more gains for broadcasting names, Viacom, or the Discovery channels, Disney, etc. Big day for Spotify, Snapchat as well. And we did see a down day for T-Mobile. We're waiting and waiting for a dip here to buy T-Mobile and add it to the portfolio. What's going on in consumer cyclicals? Amazon, similar story here, lagging, no activity whatsoever. Alibaba taking a break, but you see some of the hotter names gaining today. Wayfair, Home Depot, Lowe, Lulu, Tesla. We know the story here. General Motors, the momentum continues. Cruises, hotels, big day for both Marriott and Hilton. We did see gains in the restaurants, but we did see modest gains to declines for the casino names. And the reason is that the governor of Nevada decided to limit the opening of casinos on the strip. And what's going on with consumer defensives? The momentum in Target continues, and we will cover Target in the charts analysis because it is important. Some traders asked me today whether they should short Target or not. I gave you a hint during the options market, but we'll go over it again and cover the specific chart of TGT. Muted action overall for the consumer defensives, but we did see a rebound in beer here. Budweiser and ABEV closing in the green. Tyson, Cisco, big day for Tyson, over 4%. And we did see a resumption of the gains for Kroger and other grocery store names. What's going on here with REITs? Another big day for Simon Property and retail REITs, but we do see more pain for AMAT, public storage, and residential REITs. Mortgage rates, another green day. What's going on with utilities? We've seen plenty of weakness here for utilities in the last few days. So what happened today? Muted overall. We did see a slight bounce here for Dominion Energy, Duke, but NextEra was down over 1%, and American Water also resuming the declines over 1.5% today. What's going on with metals? Big day for metals, with exception, of course, to the black sheep here, gold. Gold declining big today. We did see a resumption to the pain in gold miners. Newmount down almost 5%. Barrick Gold down almost over 4%. FNV, Franco-Nevada down over 2%. Lots of pain here for gold miners. Different story for copper. Another day of gains. Freeport-McMoRan up over 3% or so. The same goes for iron. You see names like Vale over 4%. Chemicals, DuPont over 1.5%. But the winner of the day by far, energy. Massive gains for Chevron over 6%, and for Exxon as well over 6.5%. BP closing almost 5% to the upside. Kinder Morgan over 2%. And you see Phillips almost 7%. Massive gains here for energy. What's going on with industrials? Boeing, a resumption of the gains, 6% or so. Raytheon, Boeing and Raytheon trading together. NOC, LMT trade in a different way. Boeing, Raytheon up, LMT, NOC down. and vice versa. This is the pattern that I've been noticing for days now. What's going on with airlines? Gains across the board. Delta, Southwest, United, American, all closing big in the green. We did see FedEx, UPS, again buying these names before the holidays shopping season, buying the news, buying the rumor, buying everything. And you see FedEx and UPS closing significantly in the green. Another giant day for Caterpillar, Emerson up over 2%, and General Electric back again up 3% or so. What's going on with the laggard of the day? Healthcare, Johnson & Johnson down 1.7%. AstraZeneca, after releasing the vaccine news, down 1% or so. Eli Lilly, Pfizer, they're all closing in the red. But we did see a resumption of the gains in Moderna, which seems to be the favorite for the vaccine crowds right now, up over 3.5% for the day. Health insurers muted, modest gains for pharmacies, CVS, Walgreens, and we did see a reversal in a name that I recommended that you buy the dip at, McKesson Corporation, up over 2%. Because they will end up distributing the vaccine regardless. What's going on with financials? JP Morgan, big banks, Bank of America, Citi, Wells Fargo leading the gains today, along with all credit services, Visa, MasterCard, American Express. PayPal was not the exception today. Remember, they're buying the names that will benefit from the holidays season ahead of time. All the shopping names, PayPal, Square, they're all being bought ahead of time. Regional banks closing in the green, but not leading when you compare it to big banks, and I am anticipating a reversal here for the KRE, regional banks. And what's going on with the rotation trade? The picture is clear, and it was obvious from the beginning that we are buying the comeback names today because it is Vaccine Monday. But rest assured, some of the momentum names managed to gain today. Tesla, of course, PayPal, we talked about the names, the shopping names being bought ahead of time for e-commerce, Peloton, and FedEx closing in the green. Notable decline here for Zoom and DocuSign not being followed through, and the theme becomes more clear here why Peloton outperformed Zoom and DocuSign today due to the holidays spending anticipation. It was a holidays spending trade today. Across the side of the aisle, we do see gains for American Express, Six Flags, General Motors. Chevron is the winner of the day, but we did see a decline here for MGM just slightly because the news we heard from the governor of Nevada shutting down the operation hours for casinos. Notable rebound for Planet Fitness. It's been trading in the red for a while now, but rebounding over 4% today. The theme is very clear for the day. Rotation plus holidays shopping names. Moving on to the charts of the day, starting with the SPY from a 15 minutes perspective. Right away, we gapped higher, reversed, caught the support from the new level that you should take down here, 355.20. I did choose the number carefully because the chart is telling me that this is a very solid support repeatedly now. But we did stop short of the resistance of 359 after the Janet Yellen pump. Now what happens from here? Looking at the action today, the V reversal, the natural conclusion is that the SPY is more likely to open challenging the 359 resistance than retesting the 355.20 support, meaning another green opening tomorrow. And what do we see here from a daily perspective in the SPY? It is starting to look like a wedge. A wedge indicates a lack of decision. Wedges could break higher and lower. However, the bull's thesis here is a lot stronger because the wedge is taking place at almost all times highs, meaning that for now, breaking the wedge is likely to be to the upside unless and until we see a reversal overnight in the futures and a gap lower. And now, moving on to the Qs, 15 minutes chart. Right away, you see today's activities. We stop at the resistance level of 292, peaking just slightly above it, and then reversing down, catching support from the 288.80 area, and then bouncing higher in a series of bull flags. At the end of the day, we saw a little bit of a flush and weakness for the Qs, but for now, the chart is trading in range between the support of 288.80 and the resistance of 292. It is notable that the weakness here for the Qs when you compare it to the SPY from a daily charts perspective. But remember, we are just trading in range here, going pretty much flat. What does that mean? It means a period of energy gathering. The chart is gathering energy for an impulsive move one way or the other, to the downside or to the upside. If the rotation continues, you will see a breaking point where we see a massive exodus from tech names toward the rotation names. That would mean that all of this energy we're gathering in the chart will be released to the southern destination. However, if we do see more momentum and strength for the online names, the tech names during the holiday season, and we see the reversal of the reversal, meaning that the names that run really hot from the reopening trade, we will see profit taking, and some of that money will shift back to the technology momentum names, and you will see all of that energy exploding higher, taking us to all times highs. The SPY looking bullish, the Qs looking neutral here. So we need to dig for more information to piece out the puzzle. And for that, we move on to the dollar index. So what do we see today? From a 1 hour's perspective, we see the dollar reversing higher. We've been talking about the last act of the dollar before the flush to the long-term outlook of a weaker dollar. But for now, here comes the last act. You saw from a 1 hour perspective, the reversal and the formation of the bull flag. What does that mean? It tells me that in the beginning of the day, when we saw the reversal in the market, we saw a rush to raising cash. Traders saying today is my last day for trading. Goodbye, I'm closing positions and I'm raising cash to enjoy the holiday in peace and not worry about anything. But we did see the pump for the Janet Yellen selection reversing course and pushing the market higher. So again, the SPY formation looks very positive. The Qs look neutral, trading in range. The dollar index is saying, watch out. There might be negative action happening in the indices very soon, perhaps starting by tomorrow. Let's continue to find more about the puzzle. Here is gold. The dollar moving higher. What do you know? Gold moves lower. Where is the target here? The level of 1800. We've been talking about it for weeks and weeks now. And what's going on in the VIX? The VIX closing weaker today, but still in range. We're still waiting and anticipating for the VIX to gather the energy and blast to the upside, closing above the pivotal level of 24.8. Are we going to see that? Or are we going to see a failure and a demise for the VIX here, moving way lower below the 20 handle? Again, it is a put up or shut up week for the VIX. The VIX is telling you today, volatility still in range. Don't get too excited about the upside, but also don't get too excited about the potential for a downside. No clear message here so far, except from the dollar index. It seems to be the bold and confident one. Moving on to the TLT. What do we see here? A gap lower for the TLT. This is not what we want to see if we are anticipating a wholesome market reversal. However, on the flip side, we did see support from the double bottom formation, suggesting that we're just taking a break here in the TLT before moving higher starting tomorrow. If that doesn't happen, there is your answer. The TLT turning bearish means more bullish activities for the market. However, if the double bottom holds and we see a pop higher in the TLT, more gains for the dollar index, yields heading lower, the VIX starting to move higher, we are likely to see a reversal in the indices and we see pre-holiday profit taking. What is going on in the TNX, the 10 years treasury yield? Remember, there is still a bull flag formation that could blast to the upside, and we see the TNX trying to revisit the very important psychological level of 1%. To me, however, I see weakness here in the TNX regardless of today's pop, and I'm already betting against the move. So we'll see if I am right, or is this the longest bull flag formation ever? And here is a chart for Apple, 15 minutes perspective. We've been tracking the movement in Apple, anticipating to call a harsh reversal from 120. What do you know? Today is perhaps the day because we managed to break below 117 in a very harsh manner. There wasn't a solid dip buying or support level throughout the day. We saw a little bit of a bounce. However, by the end of the day, Apple managed to close pretty much at the lows of the day, signaling that the next destination for the name here will be 113, the next level of support. Now let's go back to piecing the puzzle. The cues were neutral, did not give us any solid signal today, but the king of the cues, Apple, is giving us an indication of significant weakness to come. So now when you start piecing things together, the TLT, the movement in the dollar index, Apple, you're starting to lean more bearish. But the VIX remains the biggest disappointment for you. So you're leaning bearish, but not quite there yet. So let's continue and piece the puzzle by looking at another important name, Tesla, from a 15 minutes perspective. What do we see here? A gap higher, visiting the 502.5 resistance, turning it into support, and then once tagging that level, never looking behind, and Tesla continued to rally throughout the day. When we switch to a daily perspective, what do we see here? We see that the chart is starting to look very, very bullish, recapturing the trend line, closing well above all of the resistance lines and above all-time highs. And we see a surge in the volume today, further solidifying that Tesla is starting to look very bullish. Furthermore, where is the point where I'm ready to short Tesla and fade the pop? Take a look at the RSI. My level is 84. I'm setting the alarm at 84. Once it hits 84, I can take the shot and buy some put options to short the name. But for now, it still has a lot of room to run before it can be qualified as overbought or extended. And the last chart I want to talk about here for TGT, Target. The viewer is asking questions saying, hey, we've seen a lot of activity with Target, a lot of buying. It's been popping higher and higher. Should I short the name and fade the news from the holidays sales numbers? To answer the question, let's open a weekly chart of Target. Remember, you don't short anything until you get, number one, a solid piece of information suggesting that the name will reverse lower. Example, the Coca news and why I shorted Hershey's. Number two, is there a technical signal for reversal? Do we see one here in Target from a weekly perspective? No, we don't. Until we see a technical reversal signal, then we short. And the third reason to short is unusual activities in the options market, meaning somebody is committing significant amount of capital betting that Target would reverse to the downside. We have not seen that yet. And the fourth indicator to short the name is the RSI, and my alarm is set at 79.5. We're not there yet. When we reach 79.5, I will review the action in the options market and the charts, and if it looks toppy, I will take the shot and short the name. But for now, it is too early. And lastly, let's move on to conclude this video. Another Monday, another vaccine headline. Moving the algorithms to revert to the rotation trade, moving names in the energy sector, materials, consumer cyclicals higher, and pushing tech and momentum names to be muted. But the real question for the week to begin with was not the vaccine headlines or the rotation trade. It was the psychological standpoint for market participants, whether they want to go to the holidays clear-headed, liquidating some of their portfolio positions, raising cash, or whether they're going to go in the all-in mentality once again and actually buy the holiday shopping e-commerce names and the rotation trade names. Will they buy the rumor, buy the news, and buy the aftermath? We saw them buy the rumor. Now they're buying the news that the Walmarts and Target and Best Buy, etc. will outperform, so they're buying it ahead of time. Will they buy the aftermath next week when we see and take a look at Black Friday's numbers? Today you have a slight clue of the answer, suggesting the latest, suggesting the market participants will stampede to push the market higher and buy before the fact, because the risk right now is to the upside, not the downside. So it is okay to go to the long holiday week exposed to the upside. Unless we see a negation of that theory and a challenge from sellers who will start dumping tomorrow, the assumption is that the market will rally all the way to Black Friday. So again, what am I looking for tomorrow? The VIX. My eyes are glued to the VIX. I want to see a surge higher for the VIX, catching a bid, even if we see the market rallying early in the morning, to confirm any sell-off before the Thanksgiving holiday. Other than that, we will see the bullish outlook taking place. Thank you for watching, and I'll talk to you again tomorrow. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.